right, let's catch up with ETFs. We get a full trading week next week. We don't get cheated out of it by some stupid holiday. And then, of course, we've got another holiday to deal with the week after, but we'll enjoy our 5 days that the government's kindly given us to trade without interruptions of forcible sitting around and doing God knows what. So, DBC, first ETF. We have busted above the channel. Commodities are strong, and we're probably going to see that for, a while. Diamonds, DIA. The Dow peaked a while ago, unlike tech stocks, peaked on May 20. We're not that far away from lifetime highs. What we need to see happen as bears would be a failure of 375.38 to really get things kind of freaked out. Emerging markets, EEM. I've actually bought puts on this as of Friday. Hard stop here at 43.08. And what I'm looking for, this isn't a great chart, but I'm looking for most optimistically a move to 40.47, which is a, good couple of dollars away. EFA, this one, let's throw down a support line real quick, just toward recent lows like so. And this is kind of in the middle of this narrowing pattern that it's been banging around in for the past couple of years. China, FXI, seems to have found support by way of this red line here. If it cuts into that red line, that's a pretty big sea change in that. Of course, China's been in a bear market of its own, uninterrupted So, that's kind of interesting that, the Communist government of China has not managed to fake things as well as the US has. GDX, kind of stuck in the muck, easily could revisit that green line and maybe even as low as that blue line. What else is cooking? GDXJ, the juniors, same deal, exact same statement. At the risk of boring you to tears with my repetition, I want to see gold at $2,100 an ounce. I want to buy lots and lots of gold at that price. As it is now, I'm in wait and see mode and managing to practice a fair bit of patience. But we're going to have to see GLD cut below 210.71 and open up the prospect of a move down to this 194.45 level. ITB, still bearish. Beautiful little top there. Long multi-decade channel. I love it. IWM, range bound, as you well know, for 2 years. Still rather high in the range. Don't write off 2024 as dead for the bears. It could be a great year still. IYR, real estate, boring as hell. IYT, head and shoulders, as you well know. We need this to slip below 61.96. The cubes, of course, a lifetime high on an intraday basis, both Monday and Thursday. And then, of course, Thursday was a nice reversal day. Short-term target 468.14. Silver, trying to rev up for a big move higher. I'd be more excited if it moved down to the blue here. Failing this green line could easily push it down into that horizontal blue. SMH, below its channel again. They've been within it for a while, reached escape velocity here, broke here, and then just has been under it ever since, with the exception of for some portion of last week. It got back into that again, but now it's below once more. So definitely seen some fracturing, some splintering in the NVIDIA-driven semiconductor bull market. Here's the spider. The key is this dashed line here. This is the midline of this multi-decade channel, and we are daintily resting on it. We've got our legs crossed at the knee. Our wrists are folded over one another in our lap, and maybe even dangling a handkerchief from one of our fingers. So that's where we're resting right now, on that midline. And the failure we need to see would be this dashed line here at 537.01. Bonds, just 0.00 change on Friday. but we've respected resistance, that red line. USO oil. Looking for this to ease back next week, and I've got one energy play related to that, which is APA. XHB, as with ITB, quite bearish long term. XLE, energy. This has been wiggling in a series of lower highs and lower lows for months. I expect a new lower low is on its way. XLF, we need to break this green level. 39.53. XLI, the industrials. Picking our nose for months now. We need to break and close below 120.17. XLU, I'm back into this again as of Friday. Cute little top there. And that green line being important support for a drop. XOP, energy. Same deal as XLE. Lower highs, lower lows. For whatever reason, I'm not quite as fond of the chart, even though it is weaker than XLE. And finally, XRT had been range bound for a very long time. Now it's just inexplicably lingering above that former resistance level, now support. And this has been duller than wet toast at this point. So, all right, well, we'll wrap it there.